Greetings viewers, the following video shall walk you through the income from property, what it constitutes and how it is taxable in Pakistan. Before we proceed, let us tell you the story of Mark, a resident of Pakistan and a salaried individual earning 3 million rupees annually. Mark pays tax on his salary as per rates of tax for salaried individuals given in Division 1 Part 1 of First Schedule of Income Tax Ordinance 2019. The tax payable is withheld by his employer and remitted to the government, and Mark only files tax return at the end of the year with no additional tax liability. In December 2020, Mark's grandfather passed away, leaving one of his apartments to him under his will. Mark decided to put it up for sale. He was able to finalize a deal to sell the flat to Amjad for a purchase price of 10 million rupees, of which 500,000 rupees were paid to Mark as token money to close the deal. Within a few days, Amjad told Mark that due to some unfortunate circumstances, he won't be able to honor the purchase of apartment, and thus Amjad had to forego the token money paid earlier to Mark. Then Mark chose to give the apartment on rent. He found a tenant, Kathy, in March 2020 for monthly rent of 35,000 rupees to be paid by the 5th of next month of occupation. Kathy also paid a non-adjustable deposit of 500,000 rupees to Mark. At the end of tax year, as Mark began to file his tax return, he realized that he had income from more than one sources now and was unsure about his tax liability. So he referred to Jason, a tax consultant, to advise him on his tax liability for tax year 2020. Jason told Mark that since he is a resident individual, the property that he inherited from his grandfather on his demise shall be treated at no gain, no loss as per section 79 of Income Tax Ordinance and thus will not be taxable. Nevertheless, Mark is liable to pay tax on his income from property for tax year 2020. As per section 15, income from property constitutes rent, which is any amount received or receivable by the owner of land or building as consideration for use or occupation of or right to use or occupy the land or building. Rent is taxable on receivable basis and at value that must not be less than the fair market rent. Income from property also includes any forfeited deposit paid under a contract for sale of land or building. Moreover, any amount received from tenant which is not adjustable with rent shall be treated as income from property and will be chargeable to tax in the year of receipt and following 9 tax years in equal proportions. Therefore, Mark's income chargeable to tax for tax year 2020 can be computed as follows. His income from salary is 3 million rupees. Rent is 35,000 rupees times 4 months, which is 140,000 rupees, since it is taxable on receivable basis. Forfeited deposit is 500,000 rupees and the non-adjustable deposit amount for the tax year is 50,000 rupees. Thus his total income from property is 690,000 rupees. His total taxable income is 3,690,000 rupees and his percentage of income from salary is 81.3%, which is greater than 75%. It can be concluded that Mark is a salaried individual. As per Income Tax Ordinance, for individuals or association of persons, the income from property is taxable as a separate block of income at separate rates specified in Division 6A of Part 1 of First Schedule. As you may have noticed, these rates are significantly lower than the normal salaried or non-salaried rates. Afterwards, the remaining income is taxed normally at normal salaried or non-salaried rates given in Division 1 Part 1 of First Schedule. Thus, the tax payable on Mark's income from property is 29,000 rupees and tax payable on his remaining income, which is income from salary, is 282,500 rupees. Thus, his total tax liability for tax year 2020 is 311,500 rupees. Then Mark asked Jason what will happen to his tax liability if he provides utilities alongside. Jason stated that income from property shall not apply to rent in respect of lease of building together with plant and machinery, rent for provision of amenities, utilities, or any other services connected with renting of building, rent from sublease of land or building, any amount received as consideration for vacating the possession of a building, and ground rent. All of these amounts are chargeable to tax under the head income from other sources. Then Marx inquired if he will get a tax refund if he returns non-adjustable deposit to tenant. On this, Jason quoted section 16 of Income Tax Ordinance, which states that if non-adjustable deposit is refunded to tenant on termination of tenancy before expiry of 10 years, no tax will be refunded. Nevertheless, if any non-adjustable deposit is received from succeeding tenant, then that succeeding deposit shall be reduced by the portion of earlier deposit on which tax had already been paid, and the remaining balance shall be chargeable to tax in the current and following 9 years in equal proportions. Mark then inquired if he will be allowed to deduct expenses for repairs and maintenance of apartment from his income from property. In response, Jason quoted section 15A, which states that only companies are allowed certain deductions from their income from property for some expenses and allowances, which include repairs up to 1/5 of rent, property insurance, property tax, water tax, ground rent, interest on mortgage taken for acquisition, construction, renovation, extension, or reconstruction of property, any capital charge, administration and collection charges that must not exceed 6% of rent and are only allowed if incurred, legal charges for defending title of property, and any irrecoverable rent. Thereafter, companies pay tax normally on their total income, which includes income from property, at flat tax rates of 29% for companies and 23% for small companies. On Mark's inquiry that if there is any way he could claim those expenses, Jason quoted section 15A, which states that individuals and association of persons deriving income from property that exceeds 4 million rupees for a tax year can opt for admissible deductions. Afterwards, they will have to pay tax on their remaining income from property at normal salaried or non-salaried tax slabs, and will not be able to benefit from separate tax rates of income from property which are significantly lower. Hope you enjoyed this video. Wish you happy learning. Thanks for watching.